All right, traders, good afternoon. This is Christian from Hertz Market Trade Group, and it is December 7th, Tuesday. So, very nice day for the market. Big participation day. Nice move in terms of overall market breadth. I'll bring that up in just a second. And then you can kind of see the second theme of the day, which kind of goes with the first, I think, too. But a big VIX move today. VIX basically crushed today. Where did the VIX finish for the day? I think right around 22, a little bit less than 22. So take a look at that chart now in the VIX. Again, I don't like to do like a ton of charting in the VIX, but you could see where this has basically gone down to 35 all the way down to hanging out in this high 20 range for a little bit for the on average for the last few days, and then moving back to 22. That is kind of that's definitely the direction that we want to see. And we want to continue to see that move down and get back below 20 in terms of overall S&P volatility. But it's like I said yesterday. Yesterday was a very nice step in the right direction. Today was even more so, and really good participation, strong breadth. I mentioned I would bring up the breadth numbers. Let me bring that up, and then we'll talk about how the day went in terms of trading and a couple technicals to watch. But yeah, look at the S&P, 24 advancing names, 6 declining. But S&P huge, 434 advancing, 68 declining, and Nasdaq pretty darn good there too, with over 2,000 advancing issues. So nice, strong breadth. So I think some of the questions that kind of arise after a day like this, and the gap up that we had, kind of coming into today. Which is, I always view the gap up days as harder days to trade. They're definitely, gap up days are not my favorite day to trade. They're my favorite day to kind of have a lot of positions on and be selling into the strength. But they're difficult days, right? So if we kind of look at this big green bar and just like that, right? Yesterday we just got over the 5-day moving average. We talked a little bit about having to get over the 20-day moving average, but this was a huge retracement back into the value and almost to the top of value. So, right back into to where we were prior to the week of, towards the beginning of the week of Thanksgiving. So, this market obviously with the VIX as high as it is, just indicating how fast this market is moving. But you could kind of see where we got to in the overnight session. 8 o'clock to 9 o'clock is where we really kind of took off. And then for the most part, we kind of just went sideways for the day, right? Now, this is the S&P, and there were some star outperformers and some areas that continued to grind for the rest of the day. But, the majority of action happened in the overnight session. I will say this, if you're not familiar with this concept of how the overnight session works versus the intraday session from 9:30 to 4, you could Google that. Google what the performance is of the overnight session versus the intraday session. On average, and I don't have the numbers right in front of me, but it is a huge difference. So this has gone on for years and years and years. This is not something new. It's just one of those things that the more that you can kind of sit with some positions, and I know that hasn't been easy the last couple of weeks. Certainly, I haven't been sitting with positions. I've made adjustments all along the way, but over time, right? That buying the close and selling the open is much more profitable than the other way around. So I just wanted to talk about that because it was such a big overnight move. But if you go back and look at last week, like last week's price action where we had one up, one down, one up, one down, if you look at the performance in some of those days, the majority of that move happened as well. Even on the days where they were difficult days where the market sold off, there was a pretty good move in the overnight session to the positive side. So that to me, why I bring this up and talk about it for over a minute is because you want to go where the money is made. And I know that it's counterintuitive, to some people who think that they can control a little bit more of their risk during the day versus in the overnight. The overnight session is scary to people because all it takes is one bad thing to happen in an overnight session, and traders get scarred. They're like, "Oh, I'm never holding overnight. I'm never holding a position overnight because I could get a downgrade or something like that, or some bad news that comes out." But those are really the outliers. So I know that that happens to everybody in their trading career, where you're holding a position, something happens in the overnight session, and you get hit, or there's some bad news that happens, and it sticks in your mind. But over time, that's not what the numbers say. Okay, so let me move on to another concept, but I wanted to make sure that you're familiar with that, because I think on days like this, when the market has already made a big percentage move, it's tough to figure out. Sometimes you get that FOMO and people end up chasing too much. All right. And then the other concept that I wanted to mention, and by the way, as we're looking at this, let me talk to this a little bit here. But we took out this 1 hour VPOC, right? We went through the value area. So I get a lot of hints from the 1 hour session, from the 1 hour chart, excuse me. But it looks like if we could overcome this version point of control, that's not a bad thing. All right. And if we look at the NASDAQ too on the 1 hour, which I don't even think I went over this chart and yesterday's video, but notice that we made it through the value area. We hesitated a little bit as normal, top of value, and now you've got a level to trade against. That's 16,315, right? If you're trading a lot of names that are in the queues, or 398.68 if you don't want to look at NASDAQ futures and you'd rather look at the queues. How this shapes up on the daily chart, we're kind of similar. We're kind of right back in that range to where we were. And I would also be watching 400 spot 45. IWM, my guess is that we're going to see back and forth action on IWM, right? We'll see what we could do in terms of the range, but notice that we stalled at the 200-day moving average. But still, I think very difficult to trade sideways markets, and I think that IWM is more sideways than anything else. Okay, so let's talk about just a couple other concepts, and I'll talk about my trade. I wanted to talk about, we certainly saw a nice sharp move back in some areas of the market, like some areas that really got beat up. Right, some high valuation names, high valuation growth names. If you look, for example, what did the ARK ETF do today, and what did the FFTY ETF do today? So the IBD 50 ETF was up 4% for the session, so very strong, right? So that's also high growth, but a different growth the way that ARK trades it. But that was also up 5.4%. So let's go back, because I know everybody's talking about today the bounce and so forth, but there's definitely lessons to be learned from what you experienced over the last couple of weeks, right? This bit about what the Fed is going to do. Yes, we generally want to be trading with the direction of the Fed, generally, right? But if the Fed does decide to taper faster and raise interest rates faster than what was originally expected, back before they last spoke, and they are in a quiet period right now until next week's Fed decision, or Fed meeting, I should say. But just keeping in mind, right, and being realistic about some names, right? When names, I'm more of a technical person than I am fundamentals, and I don't talk too much about multiples. But when names move up as they did, price to sales, 30, 40, 50 time multiples, right? You kind of have to think about these things in terms of risk to reward, right? When a name continues to go up higher and higher and higher, right? The momentum is with it, right? As such as a Cloudflare went up. Now, once there's some bad news or the name loses momentum, because it's such a high multiple name, the air is going to come out of it much faster than another name that's more fairly valued. Right? This has happened over and over the last few years. Right? So just because the Fed decides to raise interest rates, maybe a quarter, maybe another 0.25% down the line, right? You just have to think about things in terms of how far things have gone. Right. And when this thing was going up, even though it went from like 180 and it still climbed, right, making adjustments along the way in terms of position size, in terms of taking profits, right? Even if you wanted to hold this name, that's kind of the name of the game, right? That's just trading. So I'm not in the camp of, oh geez, the Fed is going to start doing this. That's game over for the market. I don't think it's game over for the market. I think you just have to be reasonable and make adjustments as you go along. You can't own a name regardless of whether the Fed is raising interest rates. That's 100 times sales, right? If you do, maybe you really, really, have the appropriate position size, which is smaller and smaller as the multiples go higher and higher. Right? Names can't just go up in a straight line forever without any repercussions. Okay, so I'm just injecting a little bit of reality into what we've seen over the last couple of weeks. Now, does this look like a more reasonable level at this point, from where Cloudflare was at 221 down to 156? I mean, it does, and we're going to have to see some of these names back and fill a little bit. All right, so that's kind of the name of the game for me, is to let some of the, realize that some areas of the market were due for a pretty decent bounce. Right, I mean, some areas really just got smoked, and probably a little bit too far to the downside. So some names went up too far on the upside, and too far to the downside. That's just how markets work sometimes, right? They're not 100% efficient, right, all the time. So that's kind of the situation there. And, from my trading aspect, and I always show or at least I try to show the trade blotter in every one of these videos. You could see I took targets, I took profits in the beginning of the day. I didn't want to get sucked into, chasing a market that gapped up. So yes, I missed some things. Like, I think like a Shopify kept on going today. Was really nice. We kind of look at the 1 hour bars of Shopify. This continued to go from where it started in the day, and just continued to kind of move up, especially the first couple hours of the session. Like an Upstart did that too, and I think Upstart may be able to kind of continue to that 210 level. It's going to maybe have to contend with this 200 pair moving average, which sometimes causes a hesitation. But there were names that continue to trend for the day. A lot of names didn't. The open was, or maybe the first hour after the open was as far as they went, and then they kind of digested. But that's fine, and that's what. So the other thing that kind of comes to mind on a day like this, and what I've learned over time, is to play your own game. Right, that's a big saying that the night from the 1980 hockey team, the coach Herb Brooks said, play your own game, trade your own system. Right, try to stay in the lines, right? And it's tough when there's things like FOMO on the tape. Twitter is a great place to learn things, but there's a lot of there's a lot of distractions on there as well. So I just decided, some of the things that I'm holding, like a microchip, which I had to sit through a little bit of back and forth price action in this one last week. But this thing, went to work, and overall, the whole semis group, right, has been one of those kind of lights at the end of the tunnel that said, hey, this market is not that bad, with the semis kind of holding in there, after a big run. So a bunch of different names in this one. MRVL was just really stellar today. This is a name in the TTG trend portfolio, but had great earnings and just was kind of held back a little bit by a tough market. Another one too in this space that was held back by a tough market was Ambarella, which closed up 11% for the day. Right, and this is what it did on earnings day. Kind of came back in and rested a little bit. A nice pop. It's also a member of the TTG trend portfolio. So this name has, this group has been very strong. The home builders have been very strong. They took they took a breather today, even though they were still up almost 1%, but they lagged the overall market today. But this group has been strong. The rails have been strong, right? So parts of the transportation. And then you've got some defensive areas that were still very strong. The utilities went up again today, right? a couple names that I'm watching within this group in AWK, American Waterworks, right? And then going back to some growth areas of the market, right? This AppLovin looks pretty good, right? Now you've got a nice level to trade against. Okay, so that's kind of what I would look for is, names that for in my system that are still holding, that are showing relative strength, that are holding above, most moving averages, while the overall market and while some growth areas really got hit, other areas in growth kind of held their own. That's more or less what I'm, looking for. And other names like I talked about Datadog. I even posted Datadog yesterday saying, hey, I don't really like the chart yet, right? But when a name goes up 9%, you take it. You take the profits, right? And especially if you're in an option, right? So for me, I don't want to be too greedy. And you could see that this thing rallied all the way up to resistance, and now you could watch to see what it does right in here into this resistance area of 178. But that option activity that we saw yesterday in the room was a great signal. Another great signal, I'm bouncing around here a little bit, but another great signal was credit spreads, right? We talked about how this to me stood out like a sore thumb, right? So this is the one, and this is something that I've gone on and gone over in each of these last like 3 or 4 videos saying, hey, this market is dipping, but we're not seeing any major panic in credit spreads, right? And you could see where this is now, right? This returned, right? So, I was even going over my notes from what we saw in March of 2020 saying this happened and that happened. Well, credit spreads were not one of those things that look like March 2020 at all, right? We got up to this 200 period moving average and moved down. And again, the reason why we're looking at this is because it shows if there's some structural major issues in the fixed income in the credit market. And we did not see that. Right? We saw a little move from the lows, which got some attention. Oh, credit spreads are moving. Yeah, but they're just moved just a tiny bit, right? And then they really backed off pretty decently. All right, so that's it. What else did we kind of do towards the end of the day? You could see I really didn't do much after a couple things. I tried a little bit of PayPal. I've looked at that name a couple times the last few days, but I decided to dump it. I don't have any conviction in it. I think it could bounce. I think it could bounce some more, maybe $4 or $5 more. But I think that there's better places to be. This was brought to my attention in the room. This Keysight, right? I would rather try a name that is doing something like this, trending, showing relative strength. I don't want to try to pick the bottom in a stock. We could look at PayPal really quickly, right? So no doubt, like this could bounce up to the 20-day moving average. Maybe you could do something more. And you do have a support level to trade against, which is 185. But that's, for me, all I would be looking for. I love the saying that I've heard multiple times is buy dips in uptrends and sell rips in downtrends. And I think some of these names that saw these huge bounces today, great opportunities to take your profits. I just wanted to go over one other thing too that I saw, which was interesting. Biotech was one of your biggest performers. So again, I think at this point, an oversold bounce. I would love to see biotech do something more. And I'll give you a level for for the XBI ETF, 117, right? But I think a great bounce to sell into. All right, and I think I mentioned AppLovin. That's one that I'm watching for tomorrow. Decided to take a couple other ones off. Last one that I'll mention is Apple. We saw this huge monster trade go up in the 200 strike calls for March. That kind of compelled me to get involved in this name. And my strategy for this one is start a position. I know this is not the best place to be starting a position on new highs, but my plan is to kind of, as if this back and fills a little bit, to kind of stay with it and add a little bit. But that's basically how to, in my opinion, how I do it in this market. If I want to get involved in something and I've got a little bit of FOMO because I see a big option trade on the tape, it's going to be legging into a position, starting a position, and taking profits if it happens to rip a little bit higher. And if not, getting a little bit of a better position established if it comes back into, say, the 5-period moving average or even halfway in between. All right, guys, that's it for today's video. Have a great night. See you tomorrow.